Okay, I take it everyone can see the chart now in front of them. Is that correct? Yeah, Damien, is the mic too loud or is it too sensitive? Because I can switch back to my old mic. It's fine. Okay, great. Thank you. So, excuse me. So, I worked on these well late into the night, and whenever we get these huge wide ranges, it is never easy to um, to necessarily figure out where we're going to have responsive buyers and where we're not going to have responsive buyers, especially when the market has the potential for getting uh, uh, vertical. So the first thing I would do uh, if I was learning to trade or if I was following someone else's trade plan is I want to have these two trend lines going off the 24-hour chart in ES and NQ. Obviously, in order to get any upside, and I need to get my drawing tools out. Sorry, guys. In order to get any upside, we obviously have to get above this overnight downtrend line that started coming out of London. Another thing to note, often coming out of London, not always, it's not a rule, no one has to follow it. It's just a general indication that a lot of trend days start looking like this, both up and down, coming out of London. And we're definitely looking like that right now. So the first clue that that we're not having a trend day down, right, is getting above, obviously, this 1824 and holding, and getting above roughly this 3470 on NQ. Second thing, right, yesterday morning, everyone needs to be aware of this. I'll show it later, right? While NQ was falling off the face of the earth, ES was having a picnic in the park, and it was suckering a lot of people in, okay? If you see NQ falling off the face of the earth, which I covered in the trade review, okay, assume that the picnic for ES will end poorly until you see NQ start to gain some kind of strength. Now, it could be, right, that relatively ES has more strength, goes down less relative to NQ, right? So all that would take would be a little bit of strength in NQ to get a lot of strength in ES. That's possible, but I would not assume that just because ES is holding, that it is going to pull NQ back up, simply because we've had too many examples of it dragging the crap out of it to the downside. So that's the first thing I wanted to mention. I have that up on my chart, so you might want to consider having that up on your charts as well. Let me get rid of this now, put it back in its proper place, and get the correct chart. Okay, so adjustments. I'm going to assume we're going to make it to the open without retesting this low down here, so we need to adjust the zone slightly, make it 1814.50 to 1816.50. And unless we just come back down and things change dramatically, I would not. That's probably going to be the zone right there. That does bring this 1821.50 to 1819.50 becomes questionable because we've traded through it very easily overnight multiple times. And so what I'm going to do is I'll give it a couple more minutes, but I'm very likely to remove this zone simply because I don't want a backside test of Thursday's low, then a breakdown, right, where we've already traded through. There's almost no rotation from, I mean, there's a 6-point rotation, but we had a 40-point range, so big deal. So I don't want to get, I don't want to set up, what I'm trying to avoid, okay, so I need to explain my philosophy on days like today. I'm not trying to hit a home run on a day like today. I'm actually would rather be more conservative on a day like today where the zones, where the ranges are wider. Normally we have a 2-point stop behind the zones in our average daily trading range. actually has slowed down a bit in the last week. We've been closer to somewhere between 12 and 20 points. 2 weeks ago, we were closer to 20 to 30 points. Yesterday, I believe we had 40 points high to low. So there's obviously a ratio between the amount of whips and volatility that the market has while it's trading, and the total range that it has. So the problem with that is our 2-point stops have a greater danger of getting hit. So while you still have plenty of time to think about it, 35 minutes before the open, okay, there's 2 ways to handle that. You can increase the stop slightly to account for the wider range and decrease your trade size proportionately. If you're a small trader, you simply have to aim for the very back of that zone. And I would probably, my gut tells me just from looking at it last night and going back and looking at past days, you probably need to move the stop behind the zones to either 2.5 or 3 points. That means if I'm a one contract trader, right, that I am pushing as far back in that zone as I can, or I'm making a simple decision to go, the market may be too hard relative to the amount of risk I can take today because it might be too volatile, and I'm going to wait. I'm going to wait to either see signs that the volatility's decreased, right, which certainly means waiting past the first hour, okay, and I'm going to value the value of my account for its potential to make me money down the road versus I have to trade today, okay? That would be my thinking if I had a very small account. I have a larger account, and I'm thinking that. My objective is to survive the hardest parts. And that means the first hour is going to be hard simply because if I haven't listened to it, but I can already hear it in my head, that people have bantied about the word crash multiple times. That always gets people nervous. Also, we have econ at 8:55. I believe it's University of Michigan consumer sentiment number. I'm not sure if we have it. Let me check real quick. Anything earlier? We do not. We have preliminary University of Michigan sentiment. There's nothing at 10 a.m. So 9:55 is it. I imagine it's going to be pretty whippy between that first 25 minutes. So keep that in mind. It's going to be harder. They don't make it easy on days like today. They didn't make it easy. As you noticed yesterday afternoon, if you look at NQ, we had a almost from the bottom of the last half hour to the top, I believe we had a 25-point rotation higher. Okay, in 30 minutes. That's pretty brutal if you're trying to stay in a trade to the downside. The other thing is, forget about yesterday. Whether you made money, lost money, or whatever happened, it was a huge day, not a huge day, it doesn't matter. All that you want today is your 1 or 2 points, put it in your pocket, and move on. If you get more from a trailer, that's great. It adds up. But you're not going to remember today or yesterday and 30 days from now. I can tell you I've worked with clients for one-on-one coaching for quite a while now, and I can promise you, I ask them, I go, well, what exactly happened on the 11th last month? And I will have to look, and they will have to look, because no one's going to remember exactly what happened unless this turns out to be the day of Armageddon. And the last time I saw an Armageddon day was 1987, and I was 17 years old. So I'm not going to bet on one today. So let's keep moving on with that in terms of zones. Okay, so I'm probably removing this zone. We're chopping right around. If it turns out to be a support point, resistance point, I'll simply miss out on the trade. This is more attractive, and this is more attractive from a trading point. So I'm going to go ahead and just make an executive decision that I'm getting rid of this, right? Even if we trade below, here, right? We come down, we reverse, and we close back above Thursday's low. That'll still create a potential trap trade back to the other side of the range. I would consider the other end of the range for the trap trade, by the way, the Globex high. I don't envision us hitting yesterday's high, but it's certainly possible. Okay, so looking at zones above and how I would trace that. Okay, so a couple of areas of caution. and I'm going to apologize now for making it so complicated. When we have super wide zones that have been incredibly poorly auctioned, like we did yesterday, the zones are much harder to get accurate out of the gate without seeing the price action that's accompanying it. So, that being said, above Globex high, I will take a short at this 1840.50 to 1842.50. I'm cautious above here. This is the 50 retrace from yesterday, and I put it there. We could reject it, but it's actually very poorly auctioned all the way up to 1849. So I am looking for, again, I will take a short at this 1849 to 1852. Notice it is 1 point wider. It's actually a 3-point wide zone, and it probably is going to require a 2-point zone behind here. It's going to be easier to get trade location in here. This is for my coaching clients on something like this, where you find a low and then you find a second test. If you can get a quick test in there, it's going to be easier to find that trade in this location. If we get above this, okay, if we start driving or shorts are trapped and we get above, this is incredibly poorly auctioned, and there's nothing standing in the way before this 59.50 to 61.50, where I will take a short. Okay, and then pretty much every zone above there, that pretty much puts us back to Friday's high. I don't envision us getting up here, at least today, but hell, anything is possible. Look at the markets we've had over the last 6 months. Okay, so I think I covered, I take a short here. Globex high, I will probably at 1832, assuming we hold this 1820 and we don't open drive higher, I'll take a short here. 35, 37. Actually, I'll take a shot at each of these zones here. Whether I take it at the front or the back will depend on price action. Okay, each of the zones should provide a pause. Very important for newer traders that are in the room, right? A couple of things, and I'm going to go over this in just a moment. 25 minutes in the zone max. Today, because of the amount of volatility we had yesterday, I'm probably going to cut that down to 20 minutes today. And if I get stopped for a small loss or it doesn't hit my profit target, I'm just going to shrug my shoulders. My concern today is more, and as it was yesterday, is more about not losing money than it is making money. And the question is, why is that? Okay, so let me answer that question. Because it will get easier after everyone has stopped trying to position themselves. What will happen is if we're going into a down market, is we'll get days where we'll get gap up on news. We'll have a little push, we'll get responsive sellers, and we'll come straight down. And it's a much easier trade. Today, what we're going to have is, A, everyone's worried about a crash, which I'm not. Okay, if it happens, we'll adjust. But B, what everyone's going to be doing is, first of all, you have people who got smoked yesterday and looked at the market and said, what the hell? So they were, they're going to come in with their sell orders early in the morning. The guys that are panicking, thinking it's all over, this is the top, right? Then you're going to have your group of guys that go, oh, this is great. This is the buying opportunity I've been looking for. And they're going to come in and slam us the other way. And what we have the high potential for doing is doing this very quickly, okay? That is a concern. A problem for a lot of traders, I want to address this area. If the market starts driving one way with no counter rotations, okay, do yourself a favor and don't keep buying every couple of ticks down trying to find the reversal. When markets reverse, they tend to do this, have some kind of retrace, and then go higher. What is every amateur trader worried about? Is this. Oh, the market's going to come down, and then it's going to go straight up without me, and I'm not going to have a chance to get on. And this rarely happens. And if it does, so what? You didn't lose any money. You had to be a superhero to figure out this entry right here. And even if you're a small trader and you have 1 or 2 contracts, there's very few guys that can actually say, I'm putting this one contract on and I'm holding it till the end of the day, or I'm holding it till next week. It just doesn't happen. We're day traders. We're, at least from my perspective, I'm looking for 2 points. Everything else is gravy. Occasionally I can call better than 2 points, but my percentages are much lower. I just wanted to make that clear. So let's go talk on the downside here really quick. Okay, on the downside, we'll probably get like we did at 1834 yesterday, responsive buyers here, but this was pretty weak. I really struggled with this. First I wanted to move it up to 1810, 1812, but even envisioning the size of the rotations that we're going to need to get down here, right? And we're currently trading at 1819. I really just like 1805, 50 to 1807, 50 a lot better than I like this zone. So again, I set these charts up for myself. I'm probably not taking a trade in this zone. Okay, now the reason why it's there at all is because what can end up happening is, okay, we can trade through, then back, and actually have it serve as resistance on the backside for push lower. Okay, but it's not an area I want to trade in. It's not even an area I want to take, that I want to even place a short in necessarily. But I do want to know where the market's likely to potentially pause or why it's pausing there. So I think these 2 points are much better. First, test the Globex low. I will be most likely at the very back, by the way, taking a long. I can tell you today they're going to make it tough probably at Globex low. At least there's a strong potential. So I'm going to give it a little bit more than the normal 2-point stop behind there. Also, this is a fantastic location to set up a trap trade, right? Break below, come back in, close above, and push all the way up to the other end of Globex high. Okay. This, by the way, is obviously not guaranteed. It's just a supposition that I make that we're going to squeeze people to the other end of the range. Okay. Below here, I can tell you I will take a trade at 1807.50 to 1805.50. 1800 is not a zone, but it is a psychologically important point. There will almost always be buyers that step in front of a big number like that at 1800, 1801. Be aware of it. If you want to put it in your trade plan, you can. I may or may not. But it is not uncommon for us to come in, get that response, and then push down to the zone below. I will be a responsive buyer here. I may or may not be here, but I will be a buyer here. Okay, and I will leave trailers, by the way, from these levels lower to come back to the upside. I'm not betting on Armageddon. The only reason I did these zones from below is because I already had enough people ask me if I thought we went down, how far we could go down. So if we duplicate what we did yesterday with the 40-point range, 1827 brings us down to 1887. Okay, I can tell you I will be a responsive buyer. There's an open gap here. It gets responsive buyers very often. I'm probably going to put a 3-point stop behind here. Okay, and I'll probably re-enter 2 times even if I get stopped. I'm willing to lose money in this area. This is a big area right here. Okay, I will take a long from the 82 to 79. Again, I want to stress, if the 3-point stops and the increased volatility are hard, do the smart thing. Lower your trade size. Okay. If you're a small trader, right, don't step in where you're getting run over by tanks and all kinds of crap, right? Just wait till the market gets easier. That's part of the building process of having a small account, right? Is you have to wait till it becomes a big account to play with the bigger traders so that you can reduce your size and they don't kick your ass. Okay, nothing's worse than having a small account all cut up only to watch it do what you thought it was going to do, which means you have to have the maturity level, okay, which is hard for a lot of traders, and I'm putting myself in that group, okay? You have to have the maturity level to go, wow, I might get my ass kicked here, and I really like my money because my money lets me trade for long and far into the future, and I'm going to have the restraint not to put myself in a place where someone might hit me with a 2x4, okay? Is that frustrating? Yeah. But what you can learn from these days, even if the volatility gets too high for you to be able to trade it with your account size, is that you should take detailed notes of what's going on, because these days do not appear very often. Okay, they're rare. And getting experience and seat time with potential days like we're going to have today and yesterday is very valuable. From a learning perspective. And that's all I can say about that, is that I would be glued to the screen. If you can record this session in any way, I would record it and review it over and over and over again, because you usually don't get warnings that these days are coming, and you need to know exactly what to do and how they've behaved in the past in order to set up your trade. So this way when your account is large, you can handle it. So that's about the last caveat I'll give on that. So zones below, I'll take a trade here. I prefer this. Okay, so here's my reasoning. We'll probably get responsive buyers, which is why there's no color here. We'll probably get responsive buyers the first time in here, but markets love to close gaps. So what we could do is get responsive buyers here, get you 2 points, and then come down in here. Also, if you'll look recently on closed gaps, they like to scare the crap out of people at the closed gaps, and they do it in one of two ways. They either shoot in and shoot out, giving you almost no time to get the trade, or they flush through it 1 or 2 points behind, then come back above, trap, and move higher. The reason why it's scary is because they generally don't do it the same way any 2 times, so that you can't catch the pattern. And if when I say they, I mean JP Morgan and Goldman Sachs. These guys have thought this through thoroughly. They have algorithms that make it very difficult for you to get trade location here. Why? They want to panic people out because they want trade location here, and they don't want just 10 contracts. They want thousands of contracts at their location, and they will engineer it the best they can, right, legally, to scare you out and let them in. So just so you know, there's no way to predict what the price action will look like when we get here. And that is why when I say I'm willing to lose money at the zone, I have no idea how they're going to do it either. I might take the top of the zone, and they might push it straight down 2 points behind, right? And then bring it back up. If I try to game it and I go, well, I'm going to take the back of the zone, they might just bring it right to the tick or 1 tick in front and ricochet it out for 5 points without ever giving me a chance to get in. But I know, just like yesterday, while I was saying that was a 50 retrace, this is an important area, and I know that there'll be responsive buyers here. Okay, going even lower. If I have the zones back there. Okay, 80, 82. I will take a responsive buy there. You got to realize that's way down, guys. It's likely that we'll be hitting this at the end of the day. I won't be taking this the last hour. I'm telling you now. This zone is a zone 75, 77. But I actually prefer 65, 67, which I believe is actually an open gap, and I've mislabeled it. I'm going to have to go and check that out. This area between 67 and 75 is actually very poorly auctioned. Okay, and if we hit this in the last hour, and again, this is an extreme. You got to realize we're talking about, we're already down 10 to 77, 30. That's 50 points down. The market's pushing 400 or 500 points down at this point. Okay, but that would create panic, and so we're very likely to get one of these moves if we fall below and we don't get responsive buyers at this point. So I'm not going to cover this anymore because I think our odds of getting down here are very low. If we get down here, I've covered it. That's it. You got to make a trading decision. If you want to play contra trade and we're down 500 points going into the last hour, be my guest. I don't like that game. So let's go back and concentrate on what we're looking for today. I am going to go ahead. I'm going to leave this right here, guys. But just know I'm probably not trading this. I just want to know why the market's pausing there when we get here. So I'm going to leave it on my chart. I'm going to leave this just like this. Obviously, we're opening. You can see how much we've traded here. It's already an overnight high volume node area, and so I'm not going to replace this zone. I'm just going to leave it blank. Okay. So what are we looking for this morning? First of all, we know that we have news at 8:55. That's probably going to be a determinant, right? So open drive lower. What does that look like? That looks like, let me see if I can pull up my NQ chart from yesterday because that was the best example. 11. Did I not save it? NQ, 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 410. I did not save it. That really sucks. Okay. So we'll just rebuild it really quick because it's important enough to see. I covered it in the trade review, but I'm going to cover it again because it is important. It wasn't perfect. Well, it was the 5-minute bar was the only problem with this open drive lower, so it wasn't picture perfect. Okay, but this, guys, is open drive lower, consistent selling, straight down, no counter rotations, no nothing, no ability to get above. This is prior day's high, is right here. Let's see where this is. Right here. Prior day's low was right. Excuse me, I stand corrected. That was Globex. Sorry, guys. Hold on a second here. Here we go. Prior day's high, right there. Okay, so you can see when we opened, we could not get above it. Prior day's low was down here, 830, right there. Okay. We snapped everything. There was Globex low in between here, right here. This thing just opened, drove lower, broke everything that it broke Globex lows, which I believe was right here. We snapped right through it. There's no counter rotation. Look at the size of the rotation of this down relative to the rotation up. These are all huge clues, okay, that sellers were serious and they were in control. No counter rotations. If you see this, look, this is the first 45 minutes of the day. If you see this, okay, don't go to yourself, well, I can figure this out. There's nothing to figure out, okay? Let them prove to you that the market's ready to reverse unless you are already a very skilled trader to begin with. And in the meantime, if ES is sitting there and doing this, okay, is doing this in that same time frame, and you're already starting to set lower lows, lower highs, right? Get concerned. Also, in addition to that, we set this downtrend tone from the morning. We were never able to break that. I would do the same thing this morning to see if we're getting a counter move, right? And then in addition, we had this trend line from the prior, this channel from the prior 3 days that finally got snapped, right? And then the last clue is an area where we should have gotten responsive buyers. And this is what I mean by the increased volatility, okay? Normally, okay, so one can make the argument that I missed the zone slightly, that I should have had it pulled back to 52.50 to 54.50. I could have made that argument and self-critique, right? But you can't nail it. But the point is, even getting pretty damn close, which I usually do, the 2 points keeps you in the trade most of the time. The volatility was increasing to the downside, and so we got tagged out just to the tick, to exactly 2 points. Usually that 2 points gives me a very comfortable zone. Usually it's a point and a tick back, okay? So that's why I was saying you might want to move a little bit further back. Normally this would have just simply stopped out on a 25-minute rule, 5, 10, 15, 20, 25 minutes. It still would have lost you a point behind the back of the zone. and even the stop was no big deal. I'm not worried about it. The point I want to make is that the whips, right? This came in, stopped exactly to the 2, then whipped right back up. And if you look at the whips in the afternoon, right here, this is 1842 in basically 10 minutes, 1842 all the way down to 1837.50. Okay, that's a wide range in 2 bars in afternoon trading. Compare that to a normal afternoon, even here late in the day, right? Look at the size of the range here at the end of the day was 1880 to 1882, and we were driving pretty much straight up. Okay, and the last hour had pretty narrow ranges. We were getting really wide ranges for the last hour, and then also the last hour trading. This was hard. You could have said, "Hey, I think the market's short," and from 115, essentially when we hit the low at 1824 and change, we rotated all the way up to 1832, and then all the way back to 1828. Last hour is going to be hard, guys, in this environment. So I think I've covered all the bases for my upside and downside scenario. What am I going to use to figure out whether we're driving higher or lower today? Let's get rid of this. We don't need it anymore. Okay, so we open at 1818, which is right here. Club flow is here. Gap fill is up here. So the first thing I want to see is an attempt. Can we or can we not get gap fill? I'm also going to measure from wherever the swing is, right? And the gap fill is actually 10 points away from where we're trading right now, okay? Let's put this to scale so we can see where we're trading. Okay, gap fill up is going to be 10 points, something to be aware of. It sets up a potential for a trap really either way at the Thursday's low, okay? And it's not an easy call. The trap can go one of two ways. We can essentially assume we trap sellers overnight down there at that 1814. We get back above this 1823. We probably find some responsive sellers at the gap. That's not a trade I'll be taking, by the way, right? And then the test is, do we hold above Thursday's low or do we break back below? I promise you, they will not make this trade right here easy. Okay, I do not even know if I'll be able to set it up, particularly if this comes prior to the 855 data release. I have no easy guidance on that. Simply choose if you're going to trade in this zone to take the loss or not, and decide whether you're going to use a 2-point stop or not. Also, if you're taking this trade first time in, right, back in the zone, realize 1.5 points get you to gap fill, right? So this is going to be a tricky area to play. I wish I had it easier. There's no doubt in my mind that it is set up like this because they wanted to make it hard. Whoever the powers are that be, they wanted to make this setup hard because they know what good traders are looking for their setups. This is all difficult. Okay, if we can get 2 gap fill, then get back below, I would look to hold below Thursday's low for test the Globex low. Globex low obviously becomes very important. We don't have much space to Globex low now. It's only 3 points. So if you take a trade here, realize that if we get an open drive lower, that we could bust straight through it. Okay. If we come up with an open drive lower and we're pushing down, okay, first of all, I'm not interested in taking a trade in this zone, as I was already clear. I will take a trade if it's prior to the news and I have at least 10 minutes at 1805, 1807, and I'm willing to lose 2.5 points behind the back of the zone here. My assumption is that we would come back up and get a backside test of this Globex low, which will easily give me my 2 points and let me have a trailer. Again, when we're trying to guesstimate some of this, it's because the ranges are wide and I have no idea how the market's going to respond. Okay. aggressive traders, you can take the back end of this area. Okay, I'm not sure that I will or won't yet. I'm going to have to see what it looks like on the open. And you can bet that there'll be there's good odds that there'll be responsive buyers here, and they'll push us back up for an attempt of either half gap or gap fill, right? If we get past gap fill, right, and we're holding above, there's plenty of room to drive us higher. We really have a lot of area to re-auction all the way up through here. Obviously, yesterday on the retrace, I would expect responsive sellers at this 1832 area. We got it overnight. We got it yesterday afternoon. And I would, based on where we're opening, first time into Globex high, I will be taking a short in this range right here for backside tested gap and potentially the low. And then if we hold the low, we have a good chance of coming back up and filling to the upside. So I know that's not as crisp and clean as I normally do it. The thing that I would emphasize the most on your charts to give you guidance as to what's going on is, first of all, the first hour will probably be hard. Okay, so if you have difficulty with the speed of the market, let the first hour pass. Use your tools. 9:30 a.m. to 11:30 a.m. tend to be the most common reversal hours. If it gets real ugly, but we could certainly reverse any time in the late afternoon. Even if we were going to have a straight down day, they usually don't make it easy, and the bounces can be significant, right? We had a 40-point range. Give the bounces, if you're going to counter them, give them room, and I would definitely be looking, unless you're a very aggressive trader, I would definitely be looking at location at the 10-point rotations today. Does that mean that if I'm wrong and we go into balance and we start, just up and down 6 points, we're going to miss trades? Yeah, that's what that means, okay? Clues for whether or not we get a potential reversal. Tick, NYSE tick, if it opens up at greater than negative 1,000, okay, often leads, not every time, but often leads to quick down and then ricochet back up, and often turns into actually trend days up. So caution